Good morning, my name is Chartpunk and this is your daily dose of Bitcoin. New week, new candles, no financial advice. Let's go. Yesterday, there was a fake news incident on the Bitcoin market. Cointelegraph falsely published a post according to which the Bitcoin spot ETF has already been approved. And based on this news, we saw a huge spike on the Bitcoin market, which basically grabbed all the outstanding liquidity to the upside. This was a huge short squeeze. And as you see, it grabbed all liquidity up until just above $30,000, exactly where this huge liquidity cluster has been located. So the big players presumably have now enough short liquidity to make an attempt to visit this sub 26K zone, where basically we can only find matching liquidity right now on the Bitcoin market. So my assumption is, this is the 3-month liquidity chart, so this is not an immediate scenario, but my assumption is that during the following weeks, it is very likely that the market makers will try to grab this zone here just under $26,000. If we come to the Bitcoin charts, as you are aware, I am following the Bitcoin market on 3 timeframes, on the weekly, 3-day and 1-day timeframes, and I am dynamically positioning myself between 0 and 3 position sizes on each timeframe. This is the weekly timeframe, and what we see here is that the price action is still under the MA30 mean. With the exception of yesterday's spike in the price, we are still around this mean level, and I cannot really think about positioning myself on the Bitcoin market on the weekly chart as long as the price is not moving confidently above $28,000. The 2 short period moving averages are under the long period moving average. So right now on the weekly chart, my position size indication is 0 out of 3. This is the 3-day Bitcoin chart. We have 1.5 days left from this candle, and still the main zone, the main supply zone that I'm watching is basically this area. As you see here, this was a very, very bearish candle with a long upwards wick and with a high turnover. This was the highest turnover in this cluster of candles. And this is a kind of a reversal candle, which indicates to me that in this area, there is a significant supply on the Bitcoin market. Now, again, if I disregard this week, this fake news week of yesterday, then what we can see is that the price is still trading in this supply zone. And the confident breach of this zone would mean to me that the price action can continue to the upside. If we take a look at the moving averages, then what we see is that by the next candle, we can have a complete flip of the moving averages. So on this chart, on this time frame, basically the next 2 to 5 days will be highly decisive in respect of whether we have to increase the position allocation to the Bitcoin market. 1-day Bitcoin chart, what we see here is again a very healthy long 3 trend structure, the same what we saw here. As you see, we have an ascending MA30 mean and the 2 short period moving averages are above its level. The main pivots to watch is basically this zone here. This zone is created by the 2 longer period moving averages. As long as we see the price action above this zone of roughly 27.1K and 27.3K. As long as the price action is happening above this level, we can assume that the long 3 position allocation on the daily chart is a proper trend following position size. However, if you are cautious, then you should consider what I said during the beginning of the video, that yesterday basically all liquidity to the upside has been grabbed by the big players, and the big players are hunting for liquidity, especially in these zones. So we can now very fairly assume that a lot of sell orders of big players have been completed yesterday, which might suggest that we might see a price move to the downside. That is in a way against the current trend structure, but that is just how market works. Markets are driven by liquidity, and liquidity is usually grabbed by the big players sooner or later.